Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into the first quarter earnings report of Zions Bancorporation. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Zions Bancorporation's latest financial results.
Revenue and profitability overview. Let's start with the top line. Zions Bancorporation reported net earnings of $169 million for the first quarter of 2025, with a diluted EPS of $1.13. How does this compare to their previous performance, John?
Well, compared to the first quarter of 2024, net earnings increased from $143 million, and the diluted EPS rose from 96 cents. This improvement is largely due to a 6% increase in net interest income, which reached $624 million, and an expansion in the net interest margin to 3.10% from 2.94% last year.
That's impressive. What factors contributed to this growth in net interest income?
The growth was primarily driven by lower funding costs and a favorable mix change in average interest-earning assets, with increases in average loans and money market investments.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.20 for Zions Bancorporation, but the actual EPS came in at 1.30 cents. Can you explain this discrepancy, John?
Certainly. The 7-cent miss can be attributed to an additional income tax expense of $16 million, or 11 cents per share, due to a revaluation of deferred tax assets following a new Utah tax law. This was a significant factor that impacted the EPS.
So despite the strong operational performance, this tax adjustment played a crucial role in the EPS miss?
Exactly. The underlying business performance was solid, but the tax revaluation was an unexpected hit to the bottom line.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Zions reported a non-interest expense of $538 million and an efficiency ratio of 66.6%. How does this reflect on their operational management?
The efficiency ratio improved from 67.9% last year, indicating better cost management. Non-interest expenses rose by 2%, mainly due to higher salaries and technology expenses, but this was offset by revenue growth, leading to a more efficient operation.
And what about their loan and deposit growth?
Loans and leases grew by 3% to $59.9 billion, and total deposits increased by 2% to $75.7 billion. This growth is a positive sign of Zions' ability to expand its customer base and maintain strong financial health.
Credit quality and risk management. Credit quality is always a concern for banks. How did Zions perform in this area?
Zions recorded a provision for credit losses of $18 million, up from $13 million last year. Non-performing assets were stable at $307 million, or 0.51% of total loans. Despite an increase in classified loans to $2.9 billion, credit quality remains stable, supported by strong underwriting practices.
So they are well positioned to handle potential economic uncertainties.
Yes, their strong reserves and credit culture should help them navigate any turbulence in the coming quarters.
CEO commentary and strategic initiatives. Let's talk about the strategic initiatives. CEO Harris H. Simmons mentioned some key developments. Can you elaborate on those?
Absolutely. Zions completed the acquisition of 4 branches in California's Coachella Valley, adding $630 million in deposits and $420 million in loans. This acquisition is part of their strategy to expand their footprint and serve new customers through their affiliate California Bank and Trust.
How does this align with their overall growth strategy?
This acquisition strengthens their market presence in California and supports their growth objectives by increasing their deposit and loan base.
Key takeaways. In summary, Zions Bancorporation delivered a solid performance in the first quarter of 2025, with strong net earnings and loan growth, despite missing the EPS forecast due to a tax adjustment. John, any final thoughts on their investment prospects?
Zions remains a strong player in the banking sector with a solid growth trajectory. Their strategic acquisitions and operational efficiencies position them well for future success, making them an attractive investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Zions Bancorporation's performance in the comments below.